Welcome to Hong Kong Brief. The content of the briefing includes: Hong Kong, push to tighten national security laws. Ant Group expands Alipay Plus to serve visa-free Lunar New Year travelers. China stock slump resumes, adding pressure on Beijing to do more. Hong Kong outlines new security law to further curtail liberties. Evergrande new energy unit shares fall as trading resumes. Hong Kong, push to tighten national security laws. Deutsche Welle. The Hong Kong government has begun the process of passing new security laws, which will further tighten restrictions on the city. These laws will build on the national security law imposed by Beijing in 2020. The government has emphasized the need to pass the legislation as soon as possible. The new laws, known as Article 23, could have significant implications for academics, businesspeople, and activists in Hong Kong. Ant Group expands Alipay Plus to serve visa-free Lunar New Year travelers. South China Morning Post. Ant Group, an affiliate of Alibaba, is expanding its mobile payment service, Alipay Plus, across Asia and parts of Europe. The service now supports 25 partner e-wallets and bank apps, covering more than 88 million merchants in 57 markets. This expansion comes as Beijing introduces new visa-free policies to promote tourism and business ties. The move is expected to attract more Chinese travelers during the upcoming Lunar New Year, although numbers are likely to remain below pre-pandemic levels due to economic headwinds. Regulatory pressure on Ant appears to be easing, with the central bank confirming that the company no longer has control over the Alipay app. China stock slump resumes, adding pressure on Beijing to do more. Bloomberg. Chinese stocks are continuing to decline, emphasizing the need for policymakers to take further steps to revive investor confidence. The MSCI China Index fell over 2% in the morning session, following a three-day rally last week. The Hang Seng China Enterprises Index, which measures Chinese stocks listed in Hong Kong, declined by as much as 2.7%, making it the worst performer in Asia. The stock market decline is due in part to concerns over the embattled real estate sector in China, which has been a major drag on the economy. Hong Kong outlines new security law to further curtail liberties. Nikkei Asia. The Hong Kong government has unveiled details of a new security law that will close loopholes not covered by existing legislation, giving authorities more power to curtail civil liberties. The law will cover offenses such as treason and the theft of state secrets, and will also prohibit foreign political organizations from forming ties with local bodies. The government will consult with legal bodies, foreign chambers of commerce, and foreign envoys on the law. The legislation will work alongside the Beijing-imposed national security law enacted in June 2020. The move comes after hundreds of activists were arrested and civil society groups were disbanded in the government's campaign to restore stability following protests in 2019. Foreign companies have closed offices in Hong Kong, and a proportion of mainland Chinese companies has increased since the start of 2020. Evergrande's liquidation, 5 things to know about what comes next. Nikkei Asia. A Hong Kong court has ordered the winding up of China Evergrande Group, a developer with over $300 billion in liabilities. Liquidators will seek to recover as much value as possible from the sale of assets, but investors are concerned about the impact of the disposals on an already struggling property market. The liquidation process could take years due to the size and complexity of Evergrande. It remains unclear how the Hong Kong ruling will be enforced by mainland authorities, and the case has raised doubts about its value as a precedent for other distressed Chinese developers. Hong Kong stocks drop in worst January since 2016 amid BYD miss, China data. South China Morning Post. Hong Kong stocks dropped on concerns about corporate earnings and China's economic recovery outlook. The Hang Seng Index fell 2%, heading for its worst January since 2016. EV maker BYD slumped after its profits trailed market consensus. The Hang Seng Index has retreated 7.5% this month. Here's what China is doing to boost economy, rescue markets. Bloomberg. Chinese policymakers have taken a number of measures in recent weeks to support the country's economy and sliding markets, including unleashing long-term cash for banks, tightening rules on share lending for short selling, and broadening developer access to loans. These measures have been taken as policymakers are concerned about a recovery hampered by a property crisis, deflation, and weak consumer confidence. However, more help may be needed if the government wants to announce an ambitious target for expansion this year when the national legislature convenes in March. Messi and Suarez both score, but Inter Miami lose first game in Saudi Arabia. South China Morning Post. Inter Miami, the Major League Soccer team co-owned by David Beckham, lost 4-3 to Al Hilal in Saudi Arabia. Lionel Messi, who joined the team in August, scored a penalty in the second half. The defeat was Inter Miami's first game of their tour of Saudi Arabia, which also includes a match against Cristiano Ronaldo's Al Nassr. Toyota holds lead as world's #1 carmaker for fourth year. Bloomberg. Toyota has become the world's top carmaker for the fourth consecutive year, selling a record 11.2 million cars in 2023. Global sales, including subsidiaries Daihatsu and Hino, rose 7.2% from the previous year. Despite falling behind in the shift towards electric vehicles, Toyota's recovery in supply chains and steady demand in North America and Europe boosted production and profits. It sold 104,018 battery EVs in 2023, compared to China's BYD company, which sold 3.02 million EVs. Toyota's CEO has promised to sell 3.5 million battery EVs annually by 2030. Retribution in the Israel-Hamas war. Foreign policy. This article argues that rape has historically been used as a weapon of war to mobilize support and incite violence. The author points to the use of rape in the conflicts between the United States and Japan during World War II and between Israel and Hamas in the ongoing Israeli-Palestinian conflict as examples. In both cases, the author claims that instances of rape were used to justify and escalate violence against the enemy. The author also argues that the media plays a role in perpetuating this cycle of violence by sensationalizing and propagandizing instances of rape. The author concludes by calling for a more nuanced and balanced approach to reporting on conflicts, including giving all parties involved an opportunity to explain their actions. China's implausible steel plunge points to oversupply dilemma. Bloomberg. China's steel industry may have manipulated production data in order to appear to comply with Beijing's production cap last year. Official data suggests that China's steel output in 2023 was barely changed from the previous year, but conflicting data, such as record iron ore imports and rising stockpiles of rebar, indicate that production may have been underreported. The steel industry in China is facing pressure to reduce overcapacity and its carbon footprint, but steel mills may be reluctant to fully close due to the cost and instead accept operating losses or underreport production. Asian Cup, Qatar end Palestine's run, Jordan stun Iraq in with last gasp winner. South China Morning Post. Qatar defeated Palestine 2-1 to reach the quarterfinals of the Asian Cup. Palestine took a first-half lead, but a late equalizer and penalty secured victory for Qatar, who will now face the winner of Uzbekistan and Thailand. Meanwhile, Jordan, having been behind to Iraq, scored twice in injury time to win the game 3-2 and will face Tajikistan in the quarterfinals. China's 10-year yield falls to two-decade low on easing hopes. Bloomberg. China's benchmark government bond yield has fallen to its lowest level in nearly 22 years as expectations for further monetary easing grow. The yield on the 10-year sovereign bond reached 2.48%, a level unseen since 2002. The Chinese economy is currently facing a housing slump and weak investor sentiment, leading to calls for further stimulus to boost growth. Beijing has already started to loosen its monetary policy, surprising the market by cutting the amount of cash banks need to set aside as reserves last week. China's stimulus lifts stocks in short-lived rally as geopolitics weighs. South China Morning Post. Efforts by China to support stocks in Shanghai, Shenzhen, and Hong Kong have led to a $689 billion gain in market valuation, but this may be short-lived as policymakers are struggling to attract money managers back to Chinese equities. A poll by Goldman Sachs revealed that 41% of investors are hesitant about buying stocks in China due to concerns over geopolitical risks, domestic politics, and deflation. The market slump in 2023 took many investors by surprise, and they remain concerned about deflation, weak demand, and liquidity problems. Hello, everyone. I'm Dr. Six, your resident observer from the 6 Degrees world. Let's jump right into today's news. First up, we have the Hong Kong government pushing to tighten national security laws. This is a continuation of the restrictions imposed by Beijing in 2020. The new laws, known as Article 23, could have significant implications for academics, businesspeople, and activists in Hong Kong. It seems like the government is determined to pass this legislation as soon as possible, which raises concerns about further curtailment of civil liberties. On a brighter note, Ant Group is expanding its mobile payment service, Alipay Plus, across Asia and Europe. This expansion comes as Beijing introduces new visa-free policies to promote tourism and business ties. While the pandemic might still affect the number of Chinese travelers during the upcoming Lunar New Year, this move is expected to attract more tourists and boost the economy. It's also worth noting that regulatory pressure on Ant appears to be easing, with the company no longer having control over the Alipay app. In the world of finance, Chinese stocks are experiencing a slump, putting pressure on policymakers to take further steps to revive investor confidence. The decline is partly due to concerns over the real estate sector, which has been dragging down the economy. It's clear that more needs to be done to support the economy and rescue the markets, as Chinese policymakers have already taken measures such as cash injections for banks and tightening rules on short selling. Moving on to the automotive industry, Toyota has once again claimed the title of the world's top carmaker. Despite falling behind in the electric vehicle market, Toyota's recovery in supply chains and steady demand in North America and Europe have boosted production and profits. It's impressive to see them selling a record 11.2 million cars in 2023. They've set a target to sell 3.5 million battery EVs annually by 2030, so it will be interesting to see how they fare in the electric vehicle race. And now, let's take a look at some sports news. Lionel Messi, who joined David Beckham's Inter Miami team last year, scored a penalty in their first game of their tour in Saudi Arabia. Unfortunately, Inter Miami lost 4-3 to Al Hilal. It's always exciting to see top football players like Messi and Cristiano Ronaldo playing in different leagues around the world. Lastly, we have some updates on the ongoing Israeli-Palestinian conflict. An article argues that rape has historically been used as a weapon of war to mobilize support and incite violence. The author points to instances of rape in conflicts like World War II and the Israeli-Palestinian conflict, claiming that they were used to justify and escalate violence against the enemy. The author calls for a more balanced approach to reporting on conflicts, allowing all parties involved to explain their actions. That wraps up today's news. Now, I want to hear from you, my brilliant audience. What are your thoughts on these topics? Do you have any questions or opinions you'd like to share? Let's open up the discussion. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.